Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bearish scenario where we are looking for a three-wave corrective structure, after which we want to see continuation to the downside. In this case, we have a finished wave W being a zigzag to the upside, a 5-3-5 ABC with a leading diagonal in wave A, flat in B and an impulse in C. The most common target for your wave C is the 1-to-1 trend-based fib extension taken from the start to the end of A to the end of wave B, which as you can see is nicely respected. After wave W, we are looking for a wave X towards the downside. Wave X can be any corrective structure, but currently on the 1 hour time frame, as I will show you in a second, probabilities are highest for a complex WXY. The common target for your wave X is between the 0.382 and the 0.786 Fibonacci, taken from the start to the end of your wave W, giving you a target between 57.5k and 51.9k. After wave X, you're looking for a wave Y towards the upside, either a zigzag, flat or triangle, which very much depends on the local structures, which we don't yet have, but your minimum target for a wave Y is the 0.618 trend-based fib extension taken from the start to the end of W to wherever the end of wave X is going to be. At the moment, I pulled the 618 from the low to the high of W to the current low that we have on X, giving you a target of 66.1k. Looking at the current support and resistance areas, you can see that around 66.1k we have this thin blue box with some important resistance between 66.3k and 66.5k. Just below we have another resistance box here, 64.6k to 65.4k. To the downside, we still have some additional support. First of all, the daily naked point of control at 57.1k. And then we have these two blue boxes over here, still inside the target area for X, 54.6 to 55.2k and 52.3 to 53k. As mentioned, after X, we are looking for wave Y to the upside, and we want to see a rejection over here, preferably not taking out the 70k top. On the 1 hour time frame, inside that wave X, we are then looking for a three-wave corrective structure. In this case, we're then looking for a zigzag to the downside in a wave W, a complex structure to the upside in a WXY inside this green wave X, and then a wave Y towards the downside. Because your wave W is a zigzag and your wave X retraced to the 0.7 Fibonacci, just to show you, you take a fib from the start to the end of your wave W, toggle on the 0.7, which as you can see is touched. It reduces the probabilities for a double zigzag, being a WXY, a sharp corrective structure, increasing the probabilities for a sideways double 3, also known as a sideways WXY. But in a sideways WXY, your wave Y is not allowed to be a zigzag if your wave W is already a zigzag. And in this case, W is counted a zigzag, and therefore your wave Y can only be either a flat structure or a triangle structure. Now at the moment, we can see a flat structure here in an ABC, and the common target for your wave Y is between 58.5k and 55.3k. This is your main area of interest to look for a move towards the upside, and preferably we see a wave Y ending after the 0.382 fib time taken from the start to the end of W to the end of wave X, comparing W with wave Y. The 382 is sitting on 2 a.m. Central European Time, the 15th of August, which is pretty much in 3 hours at the moment of recording. Now earlier today we counted this structure in a lot of detail during the live stream. It is nice for the probabilities to play out and actually get that move towards the downside, but then still the probabilities on a 1 hour remain higher to still look for this high to be taken. So this is an area of interest for a potential move to the upside, which means we're going to be focusing on signs of strength, and of course I love to use CVD. Now the most bullish scenario on a 4-hour time frame is an impulse to the upside here in a wave 1 or a wave A, which means this has to be a 5-wave structure. Because of the range that we have here, a bigger diagonal is pretty much out of the question. Because if we would look for a bigger diagonal, which means a potential 3-wave in 1, 2, 3, 4, and 5, creating a diagonal shape, your wave 2 has to be a zigzag family structure, either a simple zigzag ABC and then move up, or a double zigzag WXY. But as shown, wave X hit the 0.7 Fibonacci, taken from the high to the low here, significantly reducing the probabilities for a double zigzag, which therefore automatically reduces the probabilities for a bigger diagonal structure, and therefore we have to put wave 1 or A at the high over here, and this has to be counted as a 5-wave structure. But it has to be said that it is not an easy structure to count as a nice 5-waver. Just by the looks of it, you can see it does look 3-wavy, and that is at least something we have to keep in mind when price moves towards the upside to take out 63K. The most common target for your wave 2 is the 05 to the 786 Fibonacci, taken from the low to the high of your wave 1, 55.9 to 51.9K. Target area for your wave B is the same as your wave X. It's the 302 to the 886, 57.5, 50.6K. And then you're going to be looking for an impulse towards the upside in either a wave 3 or a wave C. Looking at the CVD divergences, then on the 15-minute time frame, this is at the moment what is going on. Yes, we have bullish CVD divergences here, as you can see, but what is at the moment a lot more interesting is to look at the CVD divergences that we have on the right side of the most recent high that is made. So if I refresh my chart, then you can see that currently there are two types of divergences. We have a bullish and a bearish one over here. For the bullish CVD divergences, to get more probabilities, we want to see price move towards the upside, break the structure with continuous bullish CVD divergences. So get a grind to the upside and bull CVD, bull CVD, bull CVD to counter the bearish CVD divergence that we have on the chart. What I do think is at least interesting to show is that on the 1-hour time frame, if we zoom out, we have now created bullish CVD divergences with the low, higher low in price, lower low on yellow. Now it doesn't mean that this would be the low and you move towards the upside. That depends on the lower time frame structures over here. You can see there is more than enough space for price to still move to the downside if it wants to still maintain the bullish CVD divergences. But it is interesting that with the most recent drop, we at least created bullish CVD divergences with the low over here. We also had some news today here, 2:30 p.m. Central European Time. Now we had some volatility on the chart. Hopefully you traded safe. Also on Thursday, tomorrow, we have some news, 2:30 p.m. Central European Time. So once again, trade safe because it might increase the volatility. If we then finally look at the probabilities of the different scenarios, then on the 4-hour time frame, the probabilities are highest to take out 63K at least first, instead of taking out 49K. Has to be said that the move to the upside here from the low looks better as a 3-waver compared to it being an impulse, a 5-wave impulse structure, which is relevant for the 4-hour bearish scenario, of course, being a WXY structure, something to at least keep an eye on if price moves to the upside. However, in both scenarios, both the WXY as well as a more impulse ABC or 1, 2, 3, we are still looking for 63K to be taken, and then we can take it from there once we hit some resistance. On the 1-hour time frame, locally over here, a WXY is currently the highest probability scenario, and therefore we have to keep an eye on signs of strength locally here for a move back towards the upside. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.